want to bring in a special guest. He's getting his MBA at Syracuse University in finance. He's the CEO of Reaper Financial. Again, none of this is financial advice, and yet it's very well thought out, just sort of lay of the land from a the economy perspective about what he sees happening and why. And so that's Patrick Riley. And Patrick, welcome back to the show. Always great to have you, sir.
Thank you, Chris. And 9.1%. That's a big number.
Yeah, I didn't even give the overall number, but you're right. 9.1% year over year, highest inflation in 40 years. There's a lot of numbers to dive into. I guess what I'd like to know from you is what number and or numbers jumped out to you the most, and why does that matter to our audience?
Yeah, so the biggest things that jump out right away are the food and shelter as well as vehicles. So shelter obviously went up considerably for the last 9 months, 10 months. And then we're starting to see it back down. And the reason we're likely seeing it back down is because the Fed raising basis points. And that means that now it's more expensive to borrow. So as it gets more expensive to borrow, the cost of a home goes down. But just because the cost of a home, the actual purchase price goes down, does not mean you're paying less for that home if the APR on your loan, your mortgage, is actually going up. If you were getting it for 2% before and you're getting it for 6% now, you're not necessarily paying any less. You might actually be paying more. So that did come down, but that's a little bit of a manipulation of the statistic. And then I also want to point out that a lot of these different prices, these numbers that are coming out of the Bureau of Labor and Statistics and coming from through the Fed, and that they're using to base their adjustments off of, these are actually weighted. So they're not weighted based on cost of goods, they're weighted based on cost of living or quality of life. So quality of life gives them a lot of room to manipulate these statistics into things like, say, before a steak was $10, and now instead of steak, you go out and you buy a pork chop. And they say, you know what? You substituted, so you haven't actually lost any quality of life. But we all know steak and pork chop is not always equal, right? So, there's a lot of potential manipulation in these numbers. And it does very much worry me that we're quite a bit higher than 9.1% right now.
Thank you. You read my mind. I was going to ask you. There is a site out there called Trueflation. They've got the year-over-year rate at 10.45%. I personally think it's much higher. What do you think the real inflation number is?
If I had to guess, I would say we're actually closer to 17%. But again, not financial advice, and that is my own estimate based off of used vehicles, based off of housing, groceries, gasoline, and you have to look at the inflation numbers are realistically different for every individual. If you use gasoline and drive 5 miles a day to work, you're not seeing as much inflation on your fuel cost as somebody who drives an hour to work every day. So it's not actually, it's not uniform across the board. So that's just something to keep in mind.
I know that you serve our nation in uniform. So first and foremost, thank you for your service. So you can plead the fifth on this or dance delicately, as well as you can. And yet I look at the situation, and let me lay this out and then you respond. Some people I think could make an argument that this is being done purposefully. And I give you two examples. One is it's very obvious that we could easily lower the cost of energy in this nation if we would just go and free up oil, what's going on with the Bakken, the Permian Basin, Alaska, things of that nature, increase the supply, you lower the price, everyone's paying less at the pump and less for food. That's the first thing. The second thing is, though, and I very infrequently agree with something that Senator Elizabeth Warren is going to say, but when Chairman Powell was testifying in front of the committee, she said, so let me get this straight. You are going to continue to raise rates to bring inflation down, and yet we all know the biggest driver of inflation is energy, and the Federal Reserve can do nothing to change the drive of cost of energy. And he goes, basically, yeah, exactly. So you've got the Federal Reserve raising rates, which is going to, like you said, make money more expensive, and then we're not doing anything to lower the cost of energy. Is this being done intentionally in some way, shape, or form to make people poorer?
Whether it's intentionally or accidentally, there is a impact to policy. So there are policies such as the Green New Deal, which push for, for example, getting rid of gasoline cars by 2025, 2035, 2045, whatever it may be. I think France set a goal for 2040. Don't quote me on that. And I know California has set a year and date to be rid of all gasoline powered cars on the road as well. With that kind of agenda, that really, it creates a conflict of interest for the country, because we really are very much reliant and dependent on the petrodollar, on the cost of energy throughout the economy. And yet, if we're trying to move the economy away from gasoline and away from oil, it really sets up kind of a knife's edge scenario where now our former allies or current allies who deal in oil, you've got Venezuela and you've got Saudi Arabia, and of course, quite a bit of the other side of the planet that's trying to compete with us. And they're producing oil, and they used to sell it to us, but now this market is going dry up for them, and they're going to start selling it elsewhere. So as we start doing that, we have to be cognizant of potentially damaging ourselves in that transition from gasoline to electric and sustainable energy.
I mean, just look at Sri Lanka, right? I mean, come on, or look what's going on in the Netherlands. It's clear that the Green New Deal is the demise of a nation, but yet they continue to push it. Just so you know, Patrick, we're having a little bit of challenge with your computer connection. So if you got a bunch of windows open or something, if you can close those. And then in the last minute, you mentioned a couple of times about the cost of housing and just because money's more expensive. I don't know if you saw the report earlier this week, and yet you've had the highest number of house cancellations, home buying cancellations, like in the last, I don't know what the number was, but it's been in a while. What do you make of that? And do you see some collapses in some markets, i.e. like a Florida and Arizona where things have been so overpriced?
So I think a lot of those cancellations are probably because people are anticipating the price of a home to continue to go down. However, as I said earlier, if the price of the home goes down because interest rates go up, then you're not actually getting that home for any less. So perhaps those cancellations are on the larger institutional buyer side that have the cash flow capital to go out and purchase for a cash deal. For the end user, the individual buyer who is just looking for their first home or moving from one home to another, there's not really any benefit in a cancellation or for trying to time the market on your home.
But it does give you maybe a little bit more inventory, maybe a little bit more negotiation power. Like, hey, I could go get this home over here. Can you do me a little bit better on this or that? But